I'm Chris Doornbos, the CEO of E3 Lithium. E3 is a development company based in Calgary, Alberta. We're repurposing a significant aquifer from an oil producer to become one of the world's largest lithium producing assets. Backed on a very sophisticated oil and gas industry in the province, E3 is poised to start construction of the project in 2026. So very shortly now, looking to have lithium operating as soon as we can after that.
Chris, thanks for coming in. Good to see you. Well, I'm actually in your country, so
welcome
me.
Yes, welcome me.
Right, we're here at PDAC, big mining event globally. What do you want out of it?
I mean, for us, PDAC is a good opportunity to network. The whole world is here. The battery companies are here, the car companies, investors, the whole government. So it's a really good opportunity to, we have a big portion of our team, we've got 8 people here on the ground, a couple of technical, and most of the corporate team is here, to have conversations that are really important. Everyone is very busy in various different meetings throughout these couple of days. So it's important because it's rare that everyone is here to talk to you. You usually have to go out to find other people.
Now, Chris, I mean, tell me, you've got a new member to the team.
Yeah.
What's that going to do for you?
It's very exciting. So just today, actually, here at the conference, we announced that the former energy minister for Alberta joined us on the board of directors. She was instrumental in bringing the legislation for development of lithium in Alberta. So yeah, she's been working on that. She started that when she first started as energy minister in 2019. In the recent election, she decided not to run, to our benefit, because now, as a big advocate for the critical minerals industry, and you can go on YouTube and you can find lots of videos about Sonia Savage talking about Alberta's critical minerals industry. And so she's very excited, we're very excited to have her join. I think she's been instrumental because one of the next big pieces that we're working on is obviously the big regulatory and permitting that we have to do in Alberta to get the project licensed and off the ground. So, and she's a very sophisticated, very experienced policy lawyer as well. So she brings that to the team. So the board is very excited. Big warm welcome to Sonia for joining today. It's very good.
In a very difficult equities market like this, investors are slightly, risk off, but industry, I think we've started, the train's left the station, we've got to start delivering on a few fronts. So we've seen, government ministers here, you're mentioning sort of OEMs and like battery manufacturers. So what do you think they want out of it? They're trying to work out who's going to actually be able to deliver? Is that the...
Yeah, I think it's hard for example, governments to pick winners. I think that they're more here to see what the industry needs. We were speaking to ministers about supporting the industry, and it is about a broad support. It's not so much about picking winners. I think more of that is looking from the business development, commercial development perspective, which is, the interest in securing offtake is still very strong. The capital markets are down because of a short-term oversupply, but the long-term outlook, if you look at the people who track these things, are still predicting a significant shortage of most of the critical raw materials into the later part of this decade. And so most of the companies that are looking for that actual real supply, they believe that, and they're here to try to find that.
Let's talk about that, because I think research and that data in a fairly nascent use case industry, like lithium and most of the EV materials. OEMs have been announcing recently, Toyota most famously, they're perhaps going to continue internal combustion engines as well, alongside of the battery side of things, because they're not sure they can access all the materials that they need. You're talking about, maybe some shortfalls coming up. I mean, what are those conversations like with groups? Because we're buying into the EV revolution, but perhaps it's not going to be as smooth a run as we think.
Well, I don't think any new industry happens smoothly and overnight, right? This is a transition. And the battery truly is the focal point of that transition. So the battery enables you to transport electricity in a mobile sense. Lightweight, high energy density batteries, that's what the lithium ion battery is. So that's the stepping stone to electrification. It's not the answer. It's the required central cog in electrification wheel. But all of the other pieces fall out of that. So, I mean, you don't have to look far now to see where the applications for lithium-ion batteries are. They're absolutely everything that's electrified today. So the use case for lithium-ion batteries has been well established. The transition to electrified transport that's a big road. That will not happen overnight. All of the companies are committing to going electric. Tesla obviously leading the charge in that for a long time now. And you're starting to see some of the car companies compete in terms of range. I published a short article on Substack talking about that exact thing, where everybody is in terms of that range and cost perspective. And there are some companies that are now starting to compete with that. And as more companies be able to bring their cost down and their range up and line into the sort of holy grail, which is price parity, which is the vehicles cost the same whether you buy gas or electric. And that's there today in the luxury side of things. So the sort of Tesla Y and comparables are there. But when you look at the smaller car segment, they're not. And the North American automobile companies know that. There was an announcement from one of them saying that they're starting a group of people to hone in on that small car and get that sort of mass transport sector of the market, which is a big component of the market, and capture that from EV. And Tesla as well is developing the less than $25,000 car. So I think that segment of the market has been missing, and that's sort of leading towards the mass adoption. Okay. But it will not happen overnight, and I think anyone who thought it might, it's just not unrealistic. You have to build the critical minerals industry, you have to build the battery factories. All of that is coming, but especially in the North American context where we are today, none of that is actually in place yet.
Expectation is a wonderful thing, but it caused a wild ride on lithium prices. 80,000 November, December 22, down to as low as 12,000 December last year. People got very confused about why that was happening. We're talking about a nascent industry. Maybe the clues in that. You also saw a lot of entrants into the lithium space, companies that weren't connected with lithium in any way, segueing into lithium pegmatite stories. It was a very frothy market, but lots of value destroyed as a result, because it was a confusing narrative and people jumping on bandwagons and so forth. That's not good for the space. But how's it affected you?
Yeah, I think that you made the comment of the market being volatile. The lithium price is volatile because there's still a very small market, and it's growing, and more supply is coming, and more battery factories are being built. And like I said, in North America, it really is just getting off the ground. But that smallness of the market and the newness of it creates incredible volatility. So prices will spike up and down. It's just how they're going to go like this for the next later part of this decade. And that's just the function of how things work. Most companies like us eventually will sign long-term off-take contracts with terms that control the price that we get paid for the product. And those will govern the security of E3's ability to produce its product, because we'll have a supplier who will be buying it for a certain price. And those terms get locked in. And then it really doesn't matter what sort of the spot market is doing, because those terms would then make the project profitable at whatever price we're being paid. So.
They're connected.
Yeah.
So you can only set a kind of term contract off the basis of what people's expectation of where the market, knowledge of where the market is today, and the expectation of maybe where it goes, depending on that kind of supply-demand gap, right? So all the basic economics there. Benchmark have talked about a sort of steady, slightly more creative growth pattern moving forward, but also a big yawning chasm of supply deficit come 2027, is around then, right? Around there, yeah. So are we going to see a little bit more volatility in terms of this erratic nature that we've seen so far?
Well, I think that if that is correct, if that prediction is correct, then the lithium price is going to go much higher than it is today again. I think that, to your point about entrance into the space, I mean, when the market is good and there's money to be raised, everybody comes, right? And then some people get funded, some people don't. Not always the best project or the best management team get funded. And I think that E3 as a company has stood out from that group because we have been around for a long enough time. We've already proven that we have a management team and we have a project that are very real. We've kept ourselves funded through both over $32 million in federal and provincial government grants, as well as just last year alone closed $30 million in capital markets fundraising. And so I think that the companies that are going to be able to be successful are the ones who have funding available. And especially now that the markets are closed right now. The capital markets are somewhat closed to critical minerals projects, and probably largely the minerals industry. Those companies who have the capital to survive this cycle, and it's a cycle. The lithium price will come back. The sentiment, the market will come back. The markets will then open up again, and people will raise money again. And it's probably not that far away. It's probably less than 12 months. So those companies who have the capital to continue to progress the project, make headway, while we're in this down cycle, are the ones who are going to lead with projects that can start making revenue in the short term.
Right.
And so I think that's really important. That's a good differentiator for companies. If you're looking at it like, you buy low, you sell high. Well, right now all the companies are low, so people should be buying from an investment perspective. But then you get nervous because what company is going to be the ones who come out on top? So capital is one way to assess that.
There's enough use cases where perhaps that doesn't always play out. But I know what you're saying. Look, access to capital and the cost of that capital gives you optionality to be in control. Yeah. Control the pace at which you move forward according to what's happening in the market environment. That's fine. But there's a lot of lithium stories still here and present today. They may look cheap, but some of those are cheap for a reason. Yeah. And that's I guess the trick, the skill to be able to identify what's real and what's not. Because doing the theory of building a company, the theory of building an operation, very different from the reality of that situation.
Well, and I think that's easy to assess from our point of view, and maybe less so from an investor who's looking at the space. But I think that, the key things to look at are, how long the company's around, how much capital they have, what they've done in the past, where they're at in their project development cycle. As things get riskier, which is when the market is soft right now, generally it's riskier because you don't necessarily know how long it's going to be soft and what companies are going to be able to survive. Yeah. Companies who are further de-risked in their development profile and have capital are likely the ones where, if I were me investing, I'd put my money.
Right. So let's look at some of the things that you did last year, which have kind of helped advance the story, which is always about moving forward, growth component to the story. Proving up that the DLE works. Yeah. It's economic. That was one of the things. Maybe just talk us through what you've had to do, maybe what people were concerned about, what issues you were dealing with, and any of the other kind of important components that you delivered on last year, which set you up for this year.
Yeah, I think last year was a huge milestone year for the company. Yeah. We were on talking to you in late last year, while we were just finishing up last year's work. And so the really big things that we did that are company movers, defined a measured indicated resource that is 5 times larger than the rest of Canada's M&I resources put together. So 16 million tons. We also, subsequent to that, piloted and demonstrated the viability of the processing technology, which for us in the space we're in direct extraction, that's an incredibly important piece of the story, is to demonstrate that it works in real time, out in the field, given real world.
Was it commercial levels? Or
well, I mean, it's scaled down from commercial, but it's a commercially...
Because you're fairly modular, isn't it?
Yeah, and they do scale very linearly. Like one column, if it extracts a certain amount, another column exactly the same will do the exact same. So it's not like you're building a bigger and bigger machine, you're building modules. And so it is in the risk profile, lower risk from a scale perspective. But that was tested and demonstrated. We ended up testing 4 different technologies plus ours, so 5 in total. We've recently announced that we've selected the vendor. It's going to be a third party for the first plant, largely because of our ability to get a performance guarantee for project financing, and speed to market. So technologies that are more further advanced in terms of their commerciality. So we selected one that we really like, that has all of those pieces that we vetted. We looked at all 4 of the externals and ours very intimately. We looked at how they interact with the downstream to make the lithium products, carbonate or hydroxide, and what the cost and implications of that are. So it's a very fulsome review that we did to understand what technology to choose. So that was made not that long ago. Now we're finishing up the last pieces of the pre-feasibility study. So we've done a lot of the work now, and most of it's complete for subsurface to plant site start. And then the engineering is now being completed for the plant site itself now, because the real first major component is DLE, right? You got pre-treatment, but the majority of the equipment that's on surface is direct extraction through to lithium products. And so that piece, now that we have selected the DLE, which is the first step, the whole thing now can be engineered. And so that's underway right now, and we're expecting results out hopefully by the end of Q2, end of June. So, I mean, that's a huge move forward because we'll book the first lithium in-brine reserve.
Yeah.
With that, we're definitely leading the charge in Canada in terms of a size of resource, our time frame to commercial. We have a very streamlined permitting regime in Alberta. We're starting to work on right now with consultation. Alberta, the first step is consultation. And once you've done your consultation, the licensing application process is very short. Like a well license is 3 months, which is your mining license. You can get a mining license in 3 months. There's nowhere in the world that is the case. And most of them are in the years, 2 to 3 years at least. So I think we'll move through the next stages of the process a lot quicker than our peers. So we'll end up probably beating a lot of them to first commercial, assuming that we can capitalize the construction.
That's so important because it's the kind of first mover advantage, speed to market, route to market, and route to prove that you can actually get this thing built and producing is fantastic. It's a barrier to the guys behind you, so it's a prohibitor. And given the scale you're talking about as well, it's so important for you to be able to do that, like now. So the help you're getting from the Canadian government and others, what does that look like in terms of financing or tax incentives or tax breaks, or at least opening a few doors for you to get the things financed?
Yeah, I mean, the Canadian government has put programs together. They're just being rolled out now. So there's $3.8 billion for critical minerals development, plus there's another $15 billion in the.
But are you moving too quickly for that? Are they going to be in position to do that?
I think so.
Yeah.
We haven't actually. There's only been the first of the 3.8. Only the first 300 million has been allocated yet. But I do think that it's all coming in the short term for us to be able to use. The challenge is that for a company like us is the speed at which the development is needed.
Yeah.
So we need lithium by 2027 according to the metrics that guys like Benchmark put out. For us to capitalize this without support, that's probably a heavy lift. But if you look at where the industry is going, battery and OEM companies are supporting critical minerals development. Governments are supporting it. There is funding available, not normally available for mining projects, right? Like you don't normally see the government step into, and they're not really going to step into the mining portion. They're going to step into the processing portion. It looks like from infrastructure to like surface processing to make battery products. That's where they're going to play, which makes sense because they're not betting on the mine then, they're betting on the process. And so I think they'll be in place in time, but it is, if you want to keep up the pace at which we need these materials, there needs to be external capital support for projects like this. Because in Canada, the way that the ecosystem works is that the junior industry is left to develop the projects, and the big companies don't do that as much anymore. So all of the incubation of new projects in Canada are done by the junior industry. And so you have to have a funding ecosystem that supports that, or that stops. And right now, with the slump in the market, the capital markets are closed, so that will stop. That the funding will stop for temporarily at least. And so, a company like us, eventually will have to go and fund the plant, and it will be a pieced together component from various different sources to get the capital we need. And that is really, when we talk about where E3 is going, we have the pre-fees, but a large part of what the company is doing here at PDC and what we're doing in general is building those relationships. Because the next big lift once the engineering is done is funding the project. And it's a much bigger lift to fund the capital than it is to fund the project, for us anyway, right now.
Yeah, and I think that's fine. And why I was talking about first mover advantage, because normally you go, well, that's absolutely what we need to do and focus on. But if you're going to need that kind of level of support without having to do some convoluted, complex, and potentially expensive solution of your own, the Canadian government can move at your pace. Otherwise, you're sitting around waiting, and while you're waiting, this is not just a Canada story. There's everyone else is trying to solve the same problem. In Australia, obviously the guys down in South America doing their thing.
Well, then we have the advantage because we make the battery product, so we don't require secondary processing.
Right.
So we can do it all and provide the battery industry in North America with a final battery product.
But can other people? What's the competitive environment out there?
Well, it depends on the type of project. So if you're a brine project using the technology similar technologies to what we're using, it's a lot easier to go all the way to the final product. If you're a hard rock mining spodumene, it is much more difficult. That step to go from a spodumene concentrate to a lithium hydroxide, for example, is very big. relatively, compared to what the size of process and the cost and the complicated nature of it. So I think that there's opportunities for projects like us to go that far, and so we're not alone. If you're a direct extraction project looking at geothermal brines in North America, most of those companies are talking about all the way to the final product. Most of the hard rock projects are talking about building a mine first, and then we'll build the processing later. But right now in North America, there is no processing at scale for that ore. So there's a missing component that, and people are talking about it. People are talking about building that missing component, but it doesn't exist today. So it is a hurdle for those companies as well.
So in terms of the kind of ex-China component, I'm talking about, well, if you've seen a few governments make a few moves on that front as well. But in terms of the ex-China component, do you feel relaxed about your timing of this, given the sort of lack of money available to most people, the lack of, I guess, technical know-how to actually get the I think, design, let alone built? I mean, are you in a good place, despite what the market's saying, despite what equities market is telling you?
Yeah, we are. Yeah, we've got a really big team now. We've been staffing up. One of the benefits to operating in Alberta is that the majority of the skill sets we need are Albertan skill sets.
Okay.
So we're just hiring local workforce, which has been great for the local economy, but also supports our business, our growing business, because we operate like oil and gas in Alberta. So we pump fluids and we move them and we process those fluids, and that's what we do every day in Alberta. So we have a bit of an advantage there, and so I think that E3 is well set up to be successful during the slump, and I think that means that we'll be one of the few that is really truly far ahead. Like, it will distance us even further from the peers as we run through the next little while.
Right, and you mentioned it earlier. Talk about contracting, whether it be term contracts or how you set these things up. Are there conversations going on? What comfort levels do they need before deals actually get signed? Because it's all, you can talk. People talk all the time, but where are you? I
think every company has different hurdles, what they're looking for. I think the engineering study is fundamental to pretty much everybody. They want to see that the costs are in line, that if they're investing or they commit to invest to your capital, that they know what the capital is, and they have an estimate that's accurate enough that they can make that assessment. They want to know that your project is viable and is profitable, so that they know that you have a chance of success, right? So they, unlike governments who are more like, we're supporting an industry, which we talked about a little bit earlier, those supply agreements are direct to you. So they want to know that you are going to be successful. So, and that determination is independent for each company. Every company has their own checklist of things that they want to see. But I think the engineering is fundamental to that. So
in terms of the kind of piloting, the testing, and when you're sending product through, that kind of vetting process takes how long? Because we're aiming for 2027? When
2026 we want to be in construction.
Construction, and that takes, 18 months?
Well, the plan will be that construction starts early to be in operations by sometime in 2026.
But of what size and what capacity? Because like I say, it's modular. You can build this thing up.
I mean, right now we're looking somewhere between 25 and 30,000 tons.
Okay.
But we are looking at it from a pragmatic lens that it could be built in stages. Very easily could be built in stages, and so that is something that is capital dependent. Right. How you we have a design for a facility, and then you look at what's available in capital and you say, okay, we'll build in two pieces, for example, right? And it's just an example. So we'd build half of the capacity in the first, we'd get that up and running, demonstrate it works, and then we would go out and build the second. Meanwhile, the problem with that is that the first bit is a bit more expensive than the second bit, because you have to build sort of like your base infrastructure. So economies of scale definitely play, and that's why companies generally go a bit bigger, because there is economies of scale. It's less per ton to build a 25,000 ton plant than a 5,000 ton plant, right? So, and therefore your revenue and your economics look better. But there is a balance there against your available capital.
Right. Okay. I guess that'll be an interesting bit when you kind of get to the point to be able to describe that, because it'll be slightly less efficient initially, and those economies will come as you roll out, expand, do whatever you do. In terms of the types of money for each of those stages, have you got a sense of where that comes from? We shareholders think, as long as it's not dilatory, all good. But that's sort of inevitable. What are you seeing in terms of when money looks at nascent industries, where it's new, where it's not happened before, it's either going to be no thank you very much, or yes, lots of conditions attached, and it's going to be a little bit more expensive, and maybe you refinance it out at a later date, etc. But are you sort of conscious of the cost and where the money comes from during that whole process?
Yeah, I think that we have a multi-pronged strategy to finding the capital for the plant. First and foremost, obviously, is any non-dilutive sources, and they're out there right now in terms of government support. The U.S. government is funding critical minerals projects in Canada as well. They're advocating that they will. So there's support from all levels that would be non-dilutive or good sources of debt from government, that sort of thing. There has been a very strong market of OEMs and battery companies supporting critical minerals projects with, more so capital to build than anything else. And that's, for us, that's what we would look for more than as a priority is support. So we get the engineering done, we get permits, we're at FID, we're ready to go build. And the condition is that that's when support comes. So you sign it today, but the real capital, cash support comes at a later date when you're ready to build. That's perfect for us because it puts a certain amount of capital towards the construction cost that becomes locked in. And then the rest of it becomes a question of strategic partnership. If the capital bill is like, if we want to be really aggressive, a strategic partner can help. And then otherwise it's debt financing. And that debt is, a lot of the decisions that we've made today, for example, using a third-party DLE, are geared towards being able to be successful, because most projects in this world, regardless of how big you are, get built with debt, right? That's what the ecosystem is there for. So you get a project financing deal, and it's usually components of multiple pieces that are brought together in one package. And so that package will have likely some purchasers, some of our who's buying our product, some of their support, some government support, some strategic reports potentially, and then largely, then it wraps around with a financing package, and then you start going and buying equipment and building. So, and that's not uncommon. That's how it works.
No, that's yeah. I think that's hopefully understood. And you can put more color on that the nearer you get to that point.
Yeah, it is like we're not there yet.
Yeah.
We have a strategy in place. The conversations are happening, but we don't really go to talk debt financing till feasibility is complete. So we're still, however long that is, at least a year, if not longer, away from those conversations. But like even today, we're having conversation with the various Canadian, we're on a roundtable conversation talking with the various Canadian funding agencies, and they are talking about the fact that they all have mandates for critical minerals. So the world is looking to fund critical minerals. And I think that's an important note, is that like never before, there's an impetus that's bigger than just profit and revenue. It's about securing a national supply of critical minerals for this growing industry. And so there's a national and North American initiative to get these projects built. And that will create the funding opportunities because there is a will that the governments and other companies are mandating down the funding path to say, go out and fund this industry. And so again, that our advantage there is that we're going to be one of the leaders in the development. And so we'll have opportunities that companies that are 5 years behind us, for example, won't have, because it's about getting the industry started. It's not going to be available when the industry is running.
We're kind of full circle here, because I think we're back to that point with disconnect between equities and what industry, what government is doing and driving towards. So I guess message to potential shareholders is have faith in the system, because everyone's working towards the same goal.
I think so. I think like there's a big, like, we talk to government, we talk to all these potential purchasers. We're in the industry having these conversations, and they haven't stopped just because there's a bit of a slump in the lithium price. The conversations are still ongoing and will continue because the market is cyclical and people understand that. And so it's tough from a capital markets perspective because you're instantaneously seeing a share price go down. But from the broad perspective of the world still needs lots of lithium, those conversations are still full swing.
Good man. Thanks for the update. Appreciate it. Well, let's stay in touch this year.
Yeah.
A lot of things happening.
Yeah,
So,
appreciate you
thanks.
coming to my side of the world.
I know, so lazy. So lazy. Okay, good.